Building a portfolio that can generate consistent dividends and ultimately lead to long-term wealth is a strategy pursued by many investors. The approach known as the Millionaire Dividend portfolio focuses on selecting and holding high-quality dividend-paying stocks that provide regular income and the potential for capital appreciation. Dividends are an attractive component of investing as they offer a steady income stream, reinvestment opportunities, and a powerful mechanism for compounding returns over time. My strategy for constructing a dividend portfolio is grounded in fundamental principles that emphasize sustainability, growth potential, diversification, and patience. At its core, the Millionaire Dividend portfolio seeks to capitalize on the ability of dividends to contribute to wealth building. A dividend is a portion of a company's earnings paid to shareholders, typically in cash, on a regular basis. Dividend-paying companies tend to be more established and financially stable, making them less risky compared to growth stocks, which rely on capital gains for returns. The goal of this strategy is to create a balanced portfolio of dividend-paying stocks that not only provides income today, but also continues to grow that income over time. One of the primary principles of this strategy is identifying high-quality companies with a proven track record of paying and growing their dividends. These are typically blue-chip companies, industry leaders that have shown resilience through economic cycles. Such companies often have strong balance sheets, a history of profitability, and a commitment to returning value to shareholders. The Dividend Aristocrats list is an excellent starting point for identifying these companies, as it includes companies that have increased their dividends for 25 consecutive years or more. A focus on Dividend Aristocrats or similar companies ensures that the portfolio is composed of stocks that can weather economic downturns and continue to reward investors. While focusing on companies that consistently pay dividends is important, it's equally critical to consider dividend growth. A stock yielding a high dividend today may seem attractive, but without growth, inflation can erode the purchasing power of those payments over time. Dividend growth is a key factor in building wealth over the long term. Companies that increase their dividends annually not only provide a hedge against inflation, but also signal financial health and confidence in their future earnings. The combination of a stable dividend yield and consistent dividend growth can significantly accelerate the compounding effect, which is the cornerstone of long-term wealth accumulation. A crucial component of my strategy is reinvesting dividends. Reinvesting dividends allows for the compounding effect to take full advantage of time. When dividends are automatically reinvested to purchase additional shares, those new shares will, in turn, generate more dividends, creating a virtuous cycle of growth. Over time, this compounding effect can result in exponential portfolio growth. Studies have shown that reinvested dividends contribute significantly to the total returns of a portfolio over the long run, sometimes accounting for as much as half of the total returns in equity markets. Diversification is another fundamental element of the Millionaire Dividend portfolio strategy. Concentrating too heavily on one sector or a few stocks can expose the portfolio to unnecessary risk. To mitigate this, it's essential to diversify across different sectors and industries. Dividend-paying stocks are prevalent in sectors such as consumer staples, utilities, healthcare, financials, and industrials. Each of these sectors reacts differently to economic conditions, which can help smooth out returns and reduce volatility. By spreading investments across a variety of sectors, the portfolio can be better positioned to withstand economic downturns and benefit from growth in different parts of the economy. That said, diversification doesn't mean blindly adding stocks to the portfolio. It's essential to carefully evaluate each company based on its financial health, dividend history, and growth potential. I focus on a combination of large-cap companies, which provide stability and reliable dividends, and select mid-cap companies, which may offer higher growth potential and dividend growth rates. The key is to find companies that align with the long-term goals of the portfolio, sustainable dividends, and the potential for capital appreciation. Another factor to consider is the payout ratio, which measures the proportion of earnings a company pays out in dividends. A lower payout ratio indicates that a company retains more of its earnings to reinvest in growth, which can signal that the company has room to increase dividends in the future. On the other hand, a very high payout ratio may be unsustainable, as the company could struggle to maintain its dividend payments if its earnings decline. Therefore, I prefer companies with moderate payout ratios, typically between 40% and 60%, which suggests a balance between rewarding shareholders and reinvesting in future growth. The selection of individual stocks is just one aspect of building a successful dividend portfolio. It's also important to manage the portfolio actively, but with a long-term perspective. This means regularly reviewing the performance of the companies in the portfolio, staying updated on their financial health, and assessing whether they continue to meet the criteria of a solid dividend-paying stock. However, it's essential to avoid overreacting to short-term market fluctuations. Dividend investing is inherently a long-term strategy, and patience is key. Short-term volatility is inevitable, but by staying focused on the long-term goals, the portfolio can grow steadily over time. In addition to stock selection, managing the portfolio's income stream is vital. As the portfolio grows and dividends accumulate, it's important to decide how to allocate that income. For investors looking to build wealth, reinvesting dividends is often the best option. However, for those who are closer to or in retirement, drawing income from dividends can provide a steady cash flow without having to sell shares. This flexibility is one of the reasons dividend investing is so attractive. It can be adapted to suit different stages of an investor's life. Another important consideration is tax efficiency. In many jurisdictions, dividends are taxed at a lower rate than regular income, which makes them a tax-efficient way to generate income. However, it's essential to be mindful of the tax implications of dividend investing, especially in taxable accounts. In some cases, it might be beneficial to hold dividend-paying stocks in tax-advantaged accounts, such as a retirement account, to defer taxes and maximize compounding. Being tax-efficient can significantly impact the overall returns of the portfolio over time. In building the Millionaire Dividend portfolio, it's important to remain realistic about expectations. While dividends can provide a stable source of income and contribute to wealth accumulation, they are not without risks. Companies can reduce or eliminate their dividends if they face financial difficulties, and market fluctuations can affect the value of the portfolio. However, by focusing on high-quality companies with a long track record of dividend payments and growth, diversifying across sectors and reinvesting dividends, it's possible to mitigate these risks and build a portfolio that generates long-term wealth. One of the key psychological aspects of this strategy is maintaining discipline and patience. The allure of quick profits can tempt investors to chase high-risk stocks or time the market, but this often leads to poor results. The power of the Millionaire Dividend portfolio lies in the steady accumulation of wealth over time, not in making speculative bets. Consistently adding to the portfolio, reinvesting dividends, and allowing time to work its magic through compounding is the recipe for success. For those starting out, the initial returns may seem modest, but this is where the long-term nature of the strategy comes into play. Compounding takes time to show its full effect, and it's in the later years of the investment journey where the exponential growth truly manifests. Investors should have a multi-decade perspective, recognizing that the slow and steady growth of dividends will ultimately lead to substantial wealth accumulation. It's not about timing the market, but rather time in the market that counts. To conclude, the Millionaire Dividend portfolio is built on the principle of investing in high-quality, dividend-paying companies that have a strong history of returning value to shareholders. By focusing on dividend sustainability, growth, diversification, reinvestment, and patience, investors can create a portfolio that generates consistent income and capital appreciation over the long term. While short-term market volatility is inevitable, the focus should remain on the long-term goal of building wealth through the compounding power of dividends. This strategy requires discipline, careful stock selection, and a willingness to let time do the heavy lifting. For those willing to commit to this approach, the rewards can be substantial, leading to financial security and the potential for generational wealth. So, what do you think of our video? Let us know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.